our first session will now really zoom into leading investments in emerging markets when it comes to scale frontier tech. Building trust and resilience in ecosystems where proprietary solutions might not be viable. We're going to look into impact funds that are catalysts for frontier techs, exactly what we just talked about, and also building sustainable, inclusive ecosystems, because that's a message that has come out of many panels, many conversations. It's not just about one rising, it's about many of us rising together. And to lead this conversation, we have Bill Liao, the partner of SOSV from the UK. We have with him in conversation Michael Weber, the managing partner of Seedstars in Switzerland, and Sunita Grote, ventures lead of UNICEF Venture Farms in the USA. Please give them all a warm welcome. Great to have you with us. Great to have you. Welcome.
Thanks very much.
Ritzi.
Picture me.
Hello.
Great to have you all here. I'm going to dive straight in. Sunita, Michael, you have both created incredible impact with your illustrious careers. You've got legendary experience in the Global South. I'm going to dive right in. And my first question is just to both of you. Yeah, like, are investors overexposed to like stagnant late-stage economies, and underexposed to global early-stage economies? Because I think people in the investment world are familiar that early stage is high growth, and they think of early-stage startups as like a high-growth opportunity, high risk. Isn't the same true of the Global South? And yeah, I would say. Early stage economies. What do you think?
Absolutely. I think there's significant investment opportunities in the Global South as well, but often our judgment is overly influenced by risk perception and probably actually lack of understanding of the particular risk factors and how that might influence an early stage startup. So obviously there is political risk, there is financial risk, et cetera, in different economies. I've often seen that be sort of brushed in one broad brush as opposed to taking a differentiated approach and just understanding how that changes the investment landscape rather than making it less attractive. Also, it might change what the companies actually focus on and how they contribute to building infrastructure, building ecosystems in a way, and that might affect timelines, but it doesn't necessarily reflect the potential or the return opportunity that there is.
Michael.
So I know you like Bill contrarian views, so I'll give it a shot at this one. So when we meet founders, obviously we want them to focus on solving problems, in the markets, which is key. But what we hear about around us is, okay, but go to the US. So everyone's pushing them to grow, obviously, to the biggest markets, or India, or could be China as well. Where what we want is actually changing the local economies. So we see, like Sunita, I think, lots of opportunities. But what we hear around us is, go out there, don't stay, only local. So that's unfortunately where the market is going, generally in emerging markets.
So I'll follow on from that. In emerging markets, then, like, if you're not, like, 61% of all venture capital ever raised was raised in Delaware C Corps. If you're saying, okay, don't go there, stay local. If the idea in the VC world is unicorn metrics, what's the alternative?
Go ahead. No, go ahead. You have a strong.
Okay. I mean, VC is the fastest growing asset class. So, when we meet emerging managers in general, they want to launch their funds, and they're attracted by VC. They think it's going to solve the solutions. I mean, there are unicorns, obviously, in emerging markets, more and more, especially in the large markets, India, China. But what we've seen is there's a big need of local small PE funds, which are working more with SMEs, or even earliest stage companies, taking them from one stage to another. That would be for me a very or much better solution for those markets than pure VC, and we're gonna like in this very small country try to hit for a unicorn. It can happen, that can definitely change the whole markets. But I think more local, like really PE fund working with very few companies, not necessarily high growth, but building for the local ecosystems, that can change.
So for you, does that mean scale is virtuous or not?
I think it's important. I mean, when you're in VC, that's what you look for, and even small PE or mid or small cap, you're looking at scale. You're looking at how you can make things more efficient, how you can grow, how you can improve. But it doesn't have to be at all costs. And if you create value, even if you create a 10 or 15 million turnover company in a country, that's impactful enough. You don't need to hit for 100 million and unicorn status.
And Sunita, your fund kind of bets on IP and transparency, right? Like, how do you define traction versus profit in that circumstance?
Well, we still look at profit and still prioritize profit. So for us, it's not a trade-off between one and the other. We focus our investments on open source solutions, and so often we get the pushback to say, oh, you're investing in non-profits. That's never going to make any money. From startups, we often get the question back, oh, you're asking me to give away my secret sauce. And actually, as we see more and more technology evolution coming up, including AI, I think if your entire business model relies on the IP that you've generated, your business model arguably is not going to be very sustainable, right? So defining how we create value and capture value has to come inherently from under parts of the business model that are not as easily replicable by others, that are more based on like local know-how, local networks, a real service offering. And so in that sense, we're not seeing a trade-off necessarily. And if you look globally, there are very large even multinational companies that run on open source tech that are very profitable, have made exits, and we're seeing increasingly a growth in the investment scene in terms of open source solutions. I think really to kind of counter what we're seeing in terms of the ability to copy and replicate now tech solutions more easily. So the value has to come from somewhere else, has to be generated elsewhere.
Yet, when a big company like IBM uses open source, they have a legal department that is funded in the billions. Yeah. How do you really ensure defensibility? Because investors are kind of obsessed with that.
How do I ensure?
Defensibility.
Yeah. So IBM's not a great example because IBM's not an open source company. IBM and a lot of the big tech corporations, actually, if you dig deep into their tech stack, you see that 60 to 80 to 90% of their tech stack is actually using open source libraries, contributions, components, without ever paying back to the open source infrastructure or community. And there's a real problem there in terms of how that market is being managed. But what we're seeing is that actually open source, in our case, in our portfolio, has actually enabled companies to scale. And so what that enables us, for instance, higher or faster adaptability and adaption in new markets, because you're able to more easily plug into and plug and play with other solutions. You can partner with other companies. So we've seen collaborations across the portfolio where each are able to take their tech stack and build a product that is unique to their region. And so those are some of the models that really are quite unique when you're open, when you're building in the open.
So Mike, when you are pitching in the world, like it's commonly understood that if you're explaining, you've lost. So how do you communicate to Western capital not to use Western metrics? Like, how do you get that message across that you're still going to get an amazing return?
So it took us 13 or 14 years to figure that out, but I think we were lucky enough because we started by what we call educating people, meaning we brought clients, investors, LPs into those markets to make them see. So we run large events, not as large as this one, but really large events just to show what was happening in those markets, that you could actually find amazing entrepreneurs, that there were other investors as well investing in those markets, local investors, which was reassuring for international investors. So I think the first 6 or 7 years of building the company was traveling all around the world, organizing events as this one, to educate people about there are opportunities in those markets. And now there's huge events like this one happening all across the markets that we cover back in the days where there was literally nothing. So I think it's a lot about making sure that people see it, but not see it, through, media and so on. So actually come, sit down, we'll, schedule meetings with, local families, local investors, VCs, angels, and more importantly, entrepreneurs. So you can get your own perception about what's going on there. And then, all of the DFI or the government money, they do a great job about publication, about how less risky it is to invest in those markets that we think about. Obviously, no one reads that, so I think this is the same work, is, come, sit down, make a bet, and you think you're going to be all right. So that's been, a long shot for us to get, Western capital down to emerging markets in general.
And just riffing off that a little bit, just for both of you, trust tends to move faster than contracts in a lot of these markets. What builds and sustains that trust? I mean, I had the example yesterday of somebody locally here explaining that all their parents got rich very quickly, and then in the 70s here, and then a lot of them got ripped off by foreign investors, and so there's a huge trust deficit that's still being felt to this day here. How do you build that trust sooner rather than later?
So I'm in a pretty unique situation that I run a fund out of a global brand that carries quite a lot of weight in emerging and developing markets, but for very different reasons. So UNICEF is known as, the one that works with government partners, that strengthens systems for children. We're often not seen as someone who can support enterprises or is a serious investor. So I have the benefit of the brand in a lot of ways because it comes with a certain amount of credibility. But one of the pieces that we've tried to do is actually build up 100% transparency. So that's really about building trust on all sides. So one of the things that our venture fund does is we operate in crypto and digital assets to allow us to really show, even if it's not 100%, even if our fund doesn't operate 100% in digital assets, those investments can be showcases to show how does the funding flow. So we're 100% transparent from the basically contributor to the fund all the way to the fund, how we make investment allocations, and down to how the startup spends it. And so we use that portfolio, that part of the portfolio, to really illustrate both to investors but also to startups as a full transparency in terms of how does the funding flow, what can it be used for, it serves its purpose. The second thing I would say is agility. So being able to show the investors and the investment portfolio that you're able to adapt the conditions, the contracts, the engagement according to local contexts. We often invest in situations, not just emerging markets, I would argue like developing markets that are more subject to fragility, to conflict, to natural disasters. And so showing that that agility and the ability to respond to circumstances and being realistic is one thing that, in our case, has built up quite a lot of trust.
So I'm just going to say what I said before, which is, through events, through relationships. So again, we spend a lot of time on the ground building those relationships. When I compare what I like with, especially the US, is, you don't need that much of a time. It's very business oriented, where in general, and again, that's a very broad generalization, but in emerging markets, again, you have to come here. And I remember an advice or something I read about, the founder of Carlyle, who said, I tried everything in the Middle East not to fly and meet them every quarter or whatever. Obviously, biggest LPs into their funds, and they were like, I bought them thousands of screens and so on, but I still had to come. They wanted to see me personally every quarter, despite having, a team on the ground. And so that's what people expect. What I like, for example, when you travel in the US, you do a good pitch, you have a convincing story. Okay, here's a check, I might not, even see you again. So, and it's really about US, because the rest of the world, it doesn't happen like that. So I think it's funny, because I think it's about also the mentality of being, risk taker. In general, I think every market except the US, it's about building that trust that takes a lot of time. That's what we recommend also for our GPs. Is especially when you work with DFIs, it's going to take a lot of time to get them on board. You have to build those relationships. It could be 2-3 years, and they're going to write the check at the end.
So moving on a little bit, frontier tech's often very local, and then something will hit and start to scale globally. And when that does, you've got, like you mentioned, PE and all these others, you've got this force of, okay, they're scaling, they're busting out of their market. How do you prevent complete value extraction and or wealth concentration? Because we've seen just a massive income disparity and wealth disparity as a side effect of success. Is there anything you can do? I throw it to both of you.
For us, that's one of the driving forces where we started the venture fund, is really trying to address what we're seeing in these like underlying inequities, not just in investing and where capital is flowing, but also how technology solutions are being built, who's building them, and therefore whose needs they serve, right? And I think now with what we're seeing with AI, that's just being, that gap is further increasing, simply because the fundamental components of building an AI system, such as your data sets, where are they mostly being generated, whose voices and needs do they mostly represent, are really being skewed towards certain parts of the world. So for us, it's really about providing this sort of flexible seed funding for innovators that are in those markets that are largely underrepresented. We've developed a set of standards to ensure that we're working with our portfolio companies on, that basically tries to help builders to look at how diverse is their AI system. So to what extent are you really meeting the needs of many and not just of the few? And then ultimately, again, taking an open source approach, in our case, when it comes to AI systems, has been fundamental. It allows for people to look under the hood, essentially. You can look at how diverse the data set was. You can look at how the algorithm's been built. In our case, that's very important because we can look at, for instance, whether child rights are being respected, whether data privacy is being violated, et cetera. And so those are some of the pieces that, for us, have been instrumental or fundamental in trying to shift the needle towards trying to close some of that gap in how tech is being currently designed and developed.
Mike, you've got the last word. We're out of time.
No, I'll just, I think the answer was comprehensive enough, so we can skip my turn.
All right, well, thank you both very much.